Finally, this week, something else that we have to watch for, thing number 3, it's got to be the Federal Reserve, of course. The Fed having its 2-day meeting that is going to be concluding on Wednesday. That's when we're going to get the Fed decision. Broadly expected, Soz, that we will see that 50 basis point increase in rates, although some are looking at 75 basis points. Either way, we are going to see a lot of positioning and repositioning potentially after that meeting. And then we got jobs report on Friday. So it's not like folks can take a rest.
If we get a 75 basis point rate hike, Julie, this market's going straight down. That's just my interpretation of it. But look, I got a good note from Krishna Guha, who covers the Fed over at Evercore ISI. The last line, his note really, I think, is very important. He said, quote, "The challenge will be not simply communicating, but sticking with a more systematic and credible approach going forward for the Federal Reserve as it pertains to communicating on what it wants to do on rate hikes." As we've heard, Julie, really over the past month and a half, various Fed members have seemed to be all over the place. Some want a 25 basis point rate hike, some want 50 basis points, some I would argue have floated 75 basis points. And you had Jerome Powell a couple weeks ago try to regain consensus, I think, inside the Federal Reserve. But still, that communication has been messy, to say the very least.
Yes, definitely. And there's one more thing I want to mention. You know, we talk about these big macro things pushing around the markets, the Treasury market in particular. There's also something happening that is more of a technical or functional underpinning to the moves that we've been seeing. And that is Japanese institutional investment managers, which have been big buyers historically of U.S. Treasuries, U.S. debt. They've been selling, according to BMO Capital Markets, cited by Bloomberg, that Japanese managers have sold almost $60 billion worth of U.S. Treasuries. Now, it's not large when you look at the overall holdings of Japanese debt, but still, it is a big movement in this market. And so that has also contributed to the selling pressure in the Treasury market, which has pushed prices down and yields higher. So that's something to continue to watch as well. So interesting little tidbit there, if you will, Soz.
That's why I like doing this show with you, Julie. You find those interesting little tidbits that I need to now actually get off the show and tweet about, but we'll leave it there for now.